Hi, welcome to the Market Alert for Monday, the 24th of May 2021. So cryptos crushed, commodities crumbled, but crappy stocks soared this week. Yeah, well, I mean, it's been like that for 13 years. I don't know about just this week. The Fed admits it's thinking about tapering. Well, that should have an impact on the market, but until they actually make a concrete decision about this, then the market will be held on the highs, and the implied volatility reflecting this. Thursday 15.11 and Friday 14.51, moving back to the downside that we can see here. So again, the upside game is on. And news this week, well, we've got a central banker out this afternoon, Bailey speaking at 3:30 p.m. For the rest of the week, what have we got? Not a lot, actually. Tuesday, we've got business climate, consumer confidence. Oil's out on Wednesday, that's the only thing. Thursday we've got the jobless claims and preliminary GDP for the US and pending home sales as well. And then Friday we've just got the core PCE price index. So it's a slow news week this week, apart from, like I say, today Bailey is speaking, but not really until the market gets towards the end of its trading day. So let's start off by having a look at the Dow, see where we're trading, and we can see here from last week the market bounced off the 78.89, managed to work its way up to we can see there this 89 level. Let me just remove these just to remove the confusion. So we can see that the market's got to get through this 89 here. So from here to here, projected down was this, where we got the 78.89, and then projected back up from there to there gives us this 89, which the market needs to take out. Now we do have obviously a much bigger swing here from this high to this low, so let's just add this one in and then remove the fibs we don't want. So we're through 38, we're through 50, and I'll put it back on. Getting carried away here in the excitement. I get rid of the 38, the 50, and then you can see at the 89 we've got a double here. We've got a 62 and an 89 at this level. So the market needs to get through this. If we do, we go to 78, 89, and then of course we will have the all-time high, which is this one here. So let's just save these. But an interesting area of resistance here. Should the market move higher, you've got this resistance across here as well, which is a physical resistance as opposed to the Fibonacci ones there. So on Friday, again, the market being brought back. You can see that we opened, we traded higher, we had a double top retracement, and then the market just made its way back down, but eventually came back 50% of the move before the market closed there. And overnight prices moving back to the upside at the moment for the Dow. Let's have a look at the DAX. We have a similar picture from projecting down to here and then projecting back. We're at 89, we're through the 78, we've got the all-time high here, but the 89 is a very interesting area, so we've got to see if prices will hold at the 15,478. Very, very important area. If it fails to hold, then we can see prices starting to head south, though it's very important that we get through this level and head back to that all-time high. On Friday, the market opened, as we can see there in the, let me just drag this back a bit, we had the market moving higher in the futures, pulling back to the 200 MA, then pulling back 89%, and then moving higher, tried to sell at the open. They brought the market back to 89% from this move back to here, and then managed to move it higher. Prices then traded sideways, and we saw some selling coming into the market, again coming back sharply before then moving to the downside there and heading back down to the 200 MA before prices found some support, get the retracement back through the 200, back through the averages, and prices moving back up towards the end of the session there, and moving higher during the morning there. And then in the afternoon, trading with the Dow, as we just saw, to the upside. This having a bit of a breather, unlike the Dow, before it ran out of steam. The market then coming back. Again, you've got that sideways move before prices broke down, and then coming back up to here from, I'll just draw this one in for you, and you'll see what I mean. So from here down to here, and then projected back to the upside. So down to here, and then projected, and again you see the market stopping at 89 before moving back to the downside there. And then prices just trading sideways into the close of the afternoon session, and then just sideways. Overnight prices finding support, opening at the DP level, moving up to Friday's high, which is important. You can see the market stopping here. They had a bit of a run there in the futures market. You can see the volume, and then we've got a double bottom here where the market's pulled back, and then prices again attempting to take out the high. So immediately we can see with the DAX that the market is desperate to get above Friday's high, and we'll probably do this when the futures market opens shortly. So with the data compressed, we've got the R1 after the high is taken out, and I'm just going to go back to the daily chart because it's 478, isn't it, is what we're looking at. So let me just grab this line that I've got in here, and let's come down to 478, which is the 89 area. So there we go. That's where the 478 from the daily chart, the 89%. So not only have we got to get through the high, we've also got to take out the yellow line there as well. So the R1 really is the area that needs to be taken out on the upside. Failure to do any of this and a close below the 200 bar moving average and the BRN takes you down to the close, takes you down to the DP. Very important area of support here for this market as well. So we'll just have to see how it plays out when the futures market opens. But certainly the area you want to keep an eye on is the yellow line there, which comes back to the 89% in the daily chart there. A quick look at the metals markets. Let's just find them. And starting off with silver, down day on Friday. They managed to slam the price down as the dollar found support, which you will see here if we just have a look. There's your JP Morgan slam. Prices managing to find support at 27.13 before being brought back. Thought they might have had a go at the 27, but you can see there at the moment the 27.50 area. The blue line there is 27.50. Holding prices when they opened are being driven up by the Asian markets at the moment, and there's a more of a condensed view of what happened on Friday in the 15-minute chart. We got to Thursday's high, and let's just slam the price down because that's what we like to do. We don't want the price of silver going up and causing any concern within the financial markets that there is a problem, and we know there's a problem because the dollar's been dying for a long time. But you can see how important it is for the market to hold at this 89.66 level at the moment, and prices closing below here will then send the gold and silver price moving back above that 28.4. The price of silver and for gold getting above the 1900 level, which again will be very important. So gold still looking good. There's a lot of volume in here. As I've mentioned before, it's really picking up in the gold market at the moment. And in the monthly chart, you can see we're working our way back through the Fibonacci's on the upside, back to that all-time high and psychological level of getting through 2000. This will be the last time the market has to get through this, then it will become a psychological support, I suspect, given what's happening in the economy and any threat of the Fed going to taper. Will certainly do that as well. But you can see how much in the last month the price of gold, the volatility in this market has turned up and started to move prices to the upside there. Let me just redraw those in. I just meant to remove the 38% there, so get rid of that one, and just through the 50 there. So we'll keep an eye on the longer time frames of these markets, in particular gold, silver, and the dollar, which is looking a bit weaker this morning, and looks like it's going to go down and retest this 89.66 level. Okay, I think that will do it for this one. A quick roundup of where we are, and let's see what happens during today. There's no news this morning, so the market's going to have to make its own direction. Could be quiet, and it's a bit of a slow news week as well, so fingers crossed the volatility doesn't drop off too much. And that will do it for this one. As ever, thanks for watching. See you in the next one.